Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hi, I'm Steve Brotman. I'm the managing partner at Alpha Partners. And this is Driving Alpha, our podcast focused primarily on investors and VCs in particular that we think drive alpha. Alpha Partners works with over 1,100 VCs, looking to partner with them on their best later stage opportunities. We've been doing this for about a decade. And my own career, I've been working in venture for about 25 years. And one of the gentlemen that we're interviewing today is Ed Sim. He's of the firm boldstart, which is an amazing firm that's had overnight success in a way that I think most entrepreneurs can recognize. In that Ed really started his career way before that in the mid-90s, initially with a New York firm and then another firm called Don Treader, where our paths crossed a couple times. In fact, he and I met when he was a VC and I was at Ad1, which is the first company that I founded in the internet sector in New York, and really one of the first enterprise software companies at the time focused on internet-enabled opportunities. Ed then went on to Don Treader, where we had the good fortune. At that time, I had raised a fund called Silicon Valley Venture Partners, and we did a deal called LivePerson, which became one of the first multi-billion-dollar companies to emerge out of the New York landscape in enterprise software. We talked a few times afterwards, sort of thinking about what we wanted to do next. I wanted to focus more on later stage growth, and Ed wanted to really focus on early stage inception investing, and that's when he launched boldstart. And so great to have you on the pod, Ed. It's
Man, lots of memories, dude. Add one. OG Steve. It's Steve, by the way, is an OG. I don't want anyone to underestimate. He is a builder and entrepreneur. He was probably one of the first kind of OG entrepreneurs doing some B2B stuff in New York, which was kind of weird, back in the mid-90s.
It was so consumery at the time, right?
Yeah. So
commerce and there's only 200 of us, I think, in total. You could fit us in a very small restaurant, or a big size restaurant, perhaps. And it was a remarkable time. And we all sort of shared the vision that New York could become something much bigger than it was.
Yeah. It's amazing, by the way, Steve. I remember we kind of had that Rodney Dangerfield-like feeling, for those old enough to know, to get no respect. And I remember you and I and others would talk about, man, if those West Coast firms would ever pay attention to what was in New York. And it's kind of funny now, because when you run around New York now, which I know that you are there, and by the way, congrats on Alpha. You guys have really done a phenomenal job finding your niche and kind of cracking on it. But man, think about it. Sequoia's here, Index is here, everyone is A16, everyone's building big offices here. Like, could you have imagined this back in the mid-90s when you're trying to raise capital and everyone wanted you to leave New York and move to California? I mean, it's kind of mind-blowing, dude.
The growth of New York is really remarkable, but as you've said in prior conversations, this is where the money is. This is where the customers are. And if you think about the genesis of technology, I remember the first couple offices here for Silicon Valley firms. They were downtown, and they're basically sales offices for Microsoft and Silicon Graphics and
Oracle and Sybase and everyone else.
Right,
yeah.
That was their tech. That was their tech presence, was selling into the enterprise. And I think, to a certain extent, you and I said, hey, New York's going to be a big place for enterprise software to actually not just buy the software, but originate it. But I don't think you and I ever thought it would have the type of success it's had. And but it made a lot of sense at the time. And at least it looked pretty good in our pitch decks, right?
It
Saying
did.
like 1/3 of all Fortune 100 companies are based in New York, and
Yeah.
et cetera, et cetera. I think we believed it, but in the same way that I think entrepreneurs often forget about is that it's really, and what you and I have both discovered is that in a way, New York is a niche. It's five or I guess it's maybe 10% of US venture at the moment, maybe 15%. But it leads to a much wider world,
It
right?
does. It does. It's like the
And
gateway.
which is really, and I think as you and I have sort of grown our own careers, I mean, we started in New York, we've expanded to a much bigger platforms that invest globally. And that's pretty interesting. How do you think about investing now? I mean, I remember investing back in the day where it was a 10-minute drive, but today is that as relevant today as it was back in the day, pre-Zoom, pre-internet?
I think for some it is, but for us it never has been. And I mean, look, when I think about investing now, first of all, I don't think I'm doing anything different than I used to do. It's just the nomenclature has changed. You know, when we first did these rounds, Steve, they were called Series A rounds. You were out raising a Series A round. Right? There's nothing before Series A. There was no seed round. That was like when we started boldstart in 2010. There are like 4 or 5 seed firms around, and they're all generalists. And we wanted to specialize in enterprise software. And people are like, "You're freaking nuts." And
I
the
think I
reason
might
we
have been
did
one of
that,
them.
yeah, yeah, and the reason we did that was not because I'm that smart, was because the founders are the smartest, right, Steve? And so you follow the founders. And we had exited a bunch of companies like GoToMeeting and Green Plum. We just exited to EMC, which eventually went public as Pivotal. And these founders kept coming back and saying, "Hey, you know what? There's this thing called Amazon EC2, free cloud computing, and I think I can actually start a company and kind of figure out if there's a model for $1 million." And at the time, as you know, Steve, you had to raise $5 million as an enterprise software company, particularly if you're building real hardcore software, to figure out if you could even nail it and nail the
Well, just to
problem.
build you had to buy the deck alphas to even start.
Yeah, yeah, and so you need that. You need the software, and then the rise of open source too. So if you look at the rise of open source and Amazon EC2, and these founders come back saying, "I just need $1 million to nail it, and then I need the real money to scale it." And they said, "Look, there's no one willing to write a small check." And we're like, "Geez, maybe I can just," and I started writing some personal angel checks, like, 25, 50K checks, nothing big. But then I realized, holy crap, if we could actually, write small checks for these founders who didn't want to raise a lot of capital at the time and provide enormous value, perhaps there's a business. And that's how boldstart started in 2010. And fast forward, the reason why I say it's not changing, there's this thing called pre-seed that showed up, which was before seed. Then there's seed plus, and there's Series A. I mean, you kind of know all the nomenclature, but the reality of it
Right.
is nothing really changed. Steve, when you started at one, I was like, I have an idea. I might not even have shipped any software yet, but I need capital. Who do I go to? And I think that's still the same thing today, except it's confusing, right? I mean, do I go to a pre-seed investor? Well, guess what? A pre-seed investor is the investor that is supposed to say, I'm going to invest in 2 people and an idea and their dog sitting in a loft. But the median age, according to PitchBook, of a company that raises a pre-seed round now is 1.2 years old. So, yeah.
Yeah, it always struck me that part of the reason there was no seed round was that angels did it. And if angels do it, they're not really documented. They're like undocumented investors. They don't really exist. They don't exist in PitchBook. Institutions
Yeah.
don't recognize them,
It's just
right?
kind of like it's like the border, right? Not kidding. Sorry, I couldn't
But
resist.
no, I mean, but AngelList in a way has sort of popularized the sector in a way that I don't think people really realized. Is that, but to your point, back in the day, institutions didn't really do zero revenue napkin businesses. That was
Particularly in New York, right? Because
New York.
everyone that started venture capital in New York at the time came from the more of the PE banking world where they had spreadsheets and they relied on financial models. And the people in the Valley had always relied on, who are the founders? How technical are they? What's the vision? How big's the opportunity? The only thing they really cared about when it came to money was, how long will the cash last, right? Everything else was really related towards how big can this be? And that was a different way of investing. And that's when I met Bob Lusson. Bob was the only angel. He was the
Right.
vice chairman of Smith Barney at the time. He literally was one of the only angels on the East Coast. He put a significant amount of his money into every startup out there to learn and to know.
Right. I
And he's like,
remember that.
yeah. And he's like, Ed, let's start Don Treader and bring a Silicon Valley approach to investing in New York. Be first, be early, find the people, building new markets, and shooting for the stars. And that was it,
So
which was different.
how'd you originally meet Lesson? What was the genesis of that? How did that?
I met him when he was at Smith Barney. He was head of the investment bank.
Mhm.
And I had invested in another company previous to that. I don't know if you remember Air Media, Mr. David Rose.
Yep.
And that was kind of a darling at the time. It was like it had this little device that took information. It took the wireless paging network, connected to your PC, and got you, real-time information, stock quotes, your email updates, et cetera. And so Smith Barney was doing a placement. And that's how I met Bob. And then Bob and I became friendly with one another. We started trading deal flow. And it went from there.
Man, just Dave Rose was like this close to being BlackBerry, right?
Yeah,
Right?
absolutely.
Could have just, oh well. Maybe-
Amazing stories, right? It's kind of like, yeah,
Yeah. So did you grow up playing lax?
I did. Yep, in Baltimore. My
Yeah.
parents had emigrated from Korea. When you're in Baltimore, eventually the only thing you do, everyone plays lacrosse, right? So I learned how to play lacrosse, and I started at a very young age.
And that's how you ended up in the Northeast.
Yep, I
Is
got my high school team was one of the tops in the country. It won the state in the country, and then I got recruited. I didn't play to get recruited. I just started getting recruited by a lot of the Ivies and other D1 programs, and ended up changing my life, kind of moving to the Northeast, and then never moved back.
So I ask because how does that color like your vision in terms of like as you're evaluating companies or startup entrepreneurs, does that ever enter your consciousness? Like this person's an athlete or they were a D1 athlete. Does that ever do that or is it not so much?
You know what? It's not the fact whether you're a D1 athlete or not. I think the question really is, as I've gotten older, is kind of what is it, that thing that you're absolutely passionate and a specialist in? And how much time, like, what are you an expert in? Whatever that is it robotics and you just spend all your waking hours obsessed with it? So I think for
Hmm.
me, Steve, is like the grit. I gotta be honest with you. It's like I had a lot of catching up to do because people had started before me, and I outworked people. Right. And that kind of put me on the map. And, one thing about sports, it's like real time decision making. You screw up, you gotta wipe out your memory and move on. You lose your spot, you're not a starter anymore, then what do? You're gonna sulk about it, you can come back. And so I think the whole grit aspect is probably one of the most important things that I mean, how many times did you get turned down? How many times you almost got a business doing this, right? So that to me, just understanding that and what it's like, and that's more of a real-time voting machine, but in the long run, that to me is probably one of the biggest determinants of success for founders, for investors starting their own funds like Alpha and Boldstart, right? I know that you and I both talked about how hard it was to raise capital for both of our things because we were unique and novel and different.
Yeah, it's that true grit. Um, and it's just sheer belief in the sector, right? And with Inception and investing, how did you get that conviction? It sounds like you start out with angel investing and then you work with Don Treader. You had that realization that there was just a gap in the market. It sounds like almost like a little cliche, right?
Yeah, what's funny? It's that it's basically like, first of all, it's what I enjoy the most. There's something just kind of magical about meeting a founder with an idea and no product and just kind of on paper and just kind of getting involved with them at the very beginning. And that emotional journey and that journey that you go on, you build some bonds, you have some ups and downs, lots of ups, lots of downs. But that relationship you build with founders over the years to me is kind of what keeps me going. And to see something and to believe that, hey, like to be that first true believer and to move with conviction, I don't know, that's just what gets me excited. And so that's what I love doing. I know that some
Yeah.
people love looking at numbers. Some people love looking at metrics. Some people love doing that. But I just love meeting founders that are kind of crazy, slightly wacky, willing to put their everything on the line to go do something. I mean, like, let's talk about Rob Lacasio. Do you remember when we first met him? Because both of us kind of did that initial round together.
Yeah.
He was in a loft. He had those Mac computers hanging off the thing, and he had been playing credit card roulette. He had maxed out 8 different credit cards and kept kind of balancing one from the other. But people like that, those are the people that are going to create value. And it's so exciting how excited were you when, not for us, but for Rob, when he went public, right? When he kind of at NASDAQ, right? And, that's like that moment to kind of recreate that moment every time in a new category with new people and watch it, how they change their lives, to meet their parents, right? Remember meeting Rob's parents? So,
Yeah.
I don't know. That's what I love doing. And that's kind of, is there a gap in the market? Yeah. I think there's a gap in the market. I think people want to touch things. They want to see a product. They want to touch things. They want to call customers. But I think in the enterprise space over time, there's only so many things you can do, right? You can provide developer tooling to write software faster and deliver that, right? You can monitor the stuff to keep the lights up 24/7. You can secure it. You can store the data. And then you have applications that touch the end user, either internally to make employees more productive or externally to sell more or to manage customer relationships. That's it.
And
The thing
to find someone who's really passionate about that is actually really hard. Passionate about that type of stuff, to the point, I have to tell you a story about Rob. And he reminded me not a couple years ago about this, is that how we actually met. He cold emailed me his business plan. And I called him back or emailed him and said, listen, I'd love to look at your plan. I was living in Hoboken at the time with I was engaged to my wife, and my computer was like frozen up, or I had viruses on it or something. And I was like, Rob, I'm sorry, I'd love to look at this, but my computer's screwed up. You know what he did? He sent his tech guy over to my house in Hoboken to fix my computer so I could read his business plan. That's grit. That's going through walls to make that happen. But to find someone who's that obsessed with infrastructure software, that requires some tricks. But also there's sort of a dark side too. I mean, did you watch the Uber series on Netflix?
I did not.
Okay. Bill Gurley said, there's two types of, he started out saying there's two types of founders. At first I thought there was only, founders that walked on water. And they actually were godlike, because they actually created miracles. They had proven miracles. And then later in his career, he's like, well, there's this other type of founder that, is sort of more cultish, with not so pure intentions. And then when he was asked sort of by the end of his career, what did he think the split was? And he basically said, look, at least in the show, he said, I think they're all cult leaders in a way. What do you think about that? Do you think that's accurate? Do you think that's like 50-50? Do you think it's just who you pick, or what's your experience been?
For me, I don't even think in those terms, frankly.
Right.
I think in very simple terms. I think there's two kinds of founders, in my opinion. Those are all steak, and those that are all sizzle. And I say steak meaning that they actually have so much substance, because we only fund highly technical founders who code, who build shit. Because when you're doing inception investing, you don't outsource that stuff. You need to live the problem. You need to solve it. You're going to code it yourself. Rob coded himself, right? I mean, that's kind of what you do. And so I say that steak, meaning that there is so much substance to what they're building, and how they're doing it. But, the sizzle founder is the one that can sell and market anything. They can sell ice to Eskimos, and those founders too. But then you have to think back and say, where's the steak? And obviously, I think in a team, you got to have a little both. You can't just have all steak, because you're not going to be able to sell anyone. You're not going to be able to tell a story and get people excited, to hire anyone, to get an investor excited. But if you're all sizzle and people kind of say, okay, let's walk through the, how you're going to code this, kind of who are the first engineers you're going to hire, and you don't have that behind you, that's going to fail too. So I think about it in those different ways, because I think when you start putting founders on a pedestal, it creates a lot of problems, right? So I don't even think about those ways. It's like, I think about it as people. We're people, Steve. You're a person, I'm a person. This founder's a person. Like, I look at my portfolio, like Guy Pajani, like he's a very interesting guy. Like, we funded his first company, Blaze, which he sold to Akamai, and it was a nice return. It wasn't kind of a retire return. And then he started Sneak, right? And our NPS is him coming back to us. He had this uncanny ability to take complicated ideas and explain it very simply to the right person, but then go dive down multiple layers deep if he had to go technical. So he had a very kind of unique kind of skill set, and he also had this vision. And so what I like to say though is like Guy never thought of himself as a cult personality. He just was a guy, and his company right now is poised to go public at some point in time in the next, in the future. The last round that they raised was at 7.4 billion. I'm still on the board, so I've been on that board from the very beginning of the journey when he, at Inception, when he was iterating on the idea. But he's not a cult figure; he's a friend. He's a person. So I don't know. I think Bill is a legend, but I just don't like to think about, those storytelling Silicon Valley terms. I think about just really people looking in the eye, building that relationship. That's ultimately what keeps things going, and why founders come back to certain investors, and why certain investors gravitate to other founders, and why other employees leave their companies to join people again and again and again.
Yeah, no, I think 90% of entrepreneurs are exactly like you said, you mentioned, and there's definitely this sort of other section. I think he's talking more about as founders develop much greater scale and wealth, how some of that might come out, which you and I probably don't spend as much time with, but it's a whole other conversation, I think. But that's a really good way to look at it, I think. In terms of like infrastructure, like when you said, hey, I really want to just focus on infrastructure, I think your typical VC is like, that's so niche, so small. It's one thing to do inception investing. It's a whole other thing to pick another vertical and be like, oh, I'm just going to focus on infrastructure, right?
Yeah.
Like that's pretty novel. So like, what was up with that? How did that come out?
Yeah, look, I started spending time through Bob. I started meeting IT executives. Well, Bob knew the CEOs, but then say, hey, Bob, let me meet the IT executives. So I started meeting IT executives at some of the largest, Fortune 500s. And they had a need. They're like, hey, what early stage startups do you have? There's this new thing called microservices coming out. There's a new thing called, Amazon EC2 and this cloud thing and, blah, 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 blah. And by the way, I was just more listening to the problems of what they were thinking about. It wasn't like they're going to give me an idea to build a company, right? Because it goes back to the Henry Ford question. If I asked my customers what they want, they'd want a faster horse. And, I kept taking these problem ideas, right? And saying, okay, how do I have the founder who actually is not even building the car, but the flying car? But how does he make it feel like a faster horse to the existing customer with an upgrade path? And so for me, infrastructure was exciting because, and even with a live person, in my opinion, that was a horizontal play. And, like during the gold rush, who made money? Levi's jeans, people that sold pickaxes and all the other stuff. So the infrastructure providers, I just felt like there is a comfort in being an arms merchant, to being the person, in any war delivering value up and down the chain. And perhaps maybe the upside wouldn't be as so big to be that one massive consumer company that you saw, but you could build a pretty big business. And frankly, I don't think anyone really cared about infra, because what happened was we'd fund these infra companies, and you go downstream or upstream, whatever you call it, the next round VCs were like, yeah, the only infra companies you're going to ever fund are in Silicon Valley. Why would I fund like, Sneak was in London and Israel, at the time, right? People wanted Guy to move in the early rounds. We had to give him his first 3 rounds before he got his A round done. And so, our big ID was in, New York and Israel. And that was like data security, data infra play. People were like, why are you in New York? And so, but eventually it became hot when people saw the first IPO, of some of these infra companies that went out, like the Datadogs of the world and all these other ones, right? Or the HashiCorps and the GitLabs. I mean, that was the era. It all of a sudden went from not very cool to a backwater investment area to like the coolest, hottest sector, because people saw the same thing. And then it got overfunded. And, and now, we'll kind of see when the dust settles, what's next, right? As you layer on AI, and either incumbents take advantage of it, or you create net new opportunities. But yeah, so anyway, that was kind of the thesis. And once again, I think as an investor, you've got to genuinely enjoy kind of whatever you're doing. And I just love geeking out in security. Or, I mean, we probably 30% of boldstart investments are in security. And we've got 3 companies that have surpassed 100 million of ARR, and others that are well past that, right? And these are companies we invested in at inception with just an idea and, no code. So you have to love it. And I and my team love kind of understanding, plugging in security holes, or plugging in, creating new tools for devs to build faster, And then it does extend, by the way. I would say, not just infra, but I like horizontal plays versus vertical plays. So, for example, even a superhuman. We had partnered with Rahul out of Fund One, and then we were his very first check in Fund Two when Rahul had started Superhuman, and we wrote multiple checks into that business as well. He was reinventing email. That's a horizontal play. It's not like it's a vertical play. So anyway, I figured horizontal infra, you could build some big businesses, but there were some challenges in the early days.
With the product, like going back to live person, it was pretty obvious. You could kind of see the value in the business.
Yes.
You could increase revenue, and you could also see reduced costs because chat, instead of voice chat, you could talk to 5 different people. From inception, you could see that.
Yeah.
Right?
Yeah. And Steve, you know what I call that, by the way? I think investors, and you tell me, you saw the same thing that I did, are too enamored with TAM. Okay. Like there's no Gartner report at the time, Steve, when we invested on chat. He was creating a completely new way of doing things. Well, you know what I call it? I call it intuitive TAM. This is intuitive TAM. You just laid out the intuitive TAM story. Like we don't need to write down how big the market is. You just laid out, if this works, it's fucking
big.
massive.
It's big.
I'll give you another good example. Guy had this idea. I'm going to create developer-friendly security. And you're like, what the fuck is developer-friendly security? He goes, look, every time an engineer builds something, they got to throw it over the wall. And there's security engineers, there'll be 2 of them. And they're literally looking at 100 different kind of updates, and it takes a month to update it. What if I could literally, as developers of coding, try to figure out all the vulnerabilities in the open source packages? I'm like, well, that's not very good, because if you found vulnerabilities, they would rather not know they existed than have to go fix it. He goes, no, I'll find them and I'll fix it for them. I'm like, holy shit, wow, okay. So now when you throw it over the wall, the application gets thrown out. You don't have to wait in the queue anymore. You've actually already fixed it and solved most of the stuff. So software delivery gets faster. Well, guess what? There wasn't a market for it. There are other people like Veracode and others, like they were analyzing code, but they found problems and they didn't fix it. They didn't do the pull requests. They didn't do all that stuff. And that little insight has created a $7.4 billion company, of which they've expanded and everything else and created a category called SecDevOps. I'll give you another example of intuitive TAM. We're working with this founder, Ian Swanson. I'd known him for 10 or 15 years, and we tried to sell a company to him in the data infra space. He built one of the first ML ops companies called datascience.com. And it was a data infra kind of provider. Fast forward, he ended up selling the company to Oracle, and it was kind of the data infra provider at Oracle. Eventually went to AWS and started running go-to-market for SageMaker and all their AI and ML. And I reconnected with Ian in October of 21. And we were at some conference, at the lobby conference, just chatting about AI and security. And he was laying out this framework for why, we're going to have to secure ML and AI. This is obviously a year before ChatGPT. And I texted him, like, let's walk out of the room. So we spent another hour and a half together. I grabbed my other partner, Ellen. And by that time, we're like, we got to do something. Let's do something together. So by January or February of 2022, we led investment in Ian and Badar and Dee's company called Protect AI to build a holistic platform to secure, at the time, secure ML and AI, right? Because there was no AI at the time. It was more ML models. And the reason why we did that was because he saw the largest customers that were selling, they were selling into from AWS, the most sophisticated ones were saying, I have zero visibility into how many models are running, where the data is coming from, how secure it all is. And so he created the concept of this thing called an ML bomb or an AI bomb, an AI bill of materials. And so now he's got, 5 different kind of product kind of wedges to kind of come in. He's a leading kind of quote unquote AI security vendor out there. And you know what our investment thesis was? It was a $10 million inception round because of a very successful founder previously. It was basically like, let's make sure he doesn't run out of money in 3 years, because within 3 years, there'll be some seminal moment in which there'll be some ML or AI hack that comes in and does major damage. Maybe a credit card algorithm gets screwed up on the front end or something. We didn't know when that was coming, but we did know that he could find the first 10 or 20 customers over a period of time. And once again, the intuitive TAM was at that time was like, how many AI models and ML models in production? How many are making decisions about hiring people and credit cards and all these things? A lot. Who's building stuff around it? No one. And so that was another intuitive TAM story. And guess what? We raised a $37 million round last year, and they're off to the races now. So once again, to your point, there's no Gartner model, there's no nothing, there's no market map. I like to joke them saying, if it's market mapped, it's too late for us. I don't want to be on a market map. So That's how I think about it. And I know you think about it very similarly when we were doing some of these early
Yeah.
stage deals.
In terms of like cybersecurity, I'm warming to cybersecurity.
Yeah.
And have made a couple jabs at it over the years. Um, it's a little harder, to like intuit because in a lot of ways it's a fear sale, right? It's like, well, what happens if you get hacked and lose billions of dollars? Well, how about you pay me $10 million and I'll sell you some software to protect against that risk. So how do you think about that intuitive TAM? I mean, it's a little bit of a curveball question, but how do you think about that? Like in terms of like identifying the need?
All right.
Like,
So I'll start with 30,000. First of all, cybersecurity to me is a gift that keeps on giving. Sadly. I mean, let me give you an example. The budget, I think at JP Morgan is $1 billion for cyber. That includes software and people. And yet it increases every year by 5 to 6%, no matter what. And guess what? They need to protect their assets. It's basically a nation state kind of risk thing. Nation state actors are attacking them. So when I think about intuitive TAM, there are a couple of things. Whenever there is a new technology, that creates a new attack vector, whether it's the internet, Checkpoint and IDS came around, whether it's the cloud, right? Now there's cloud security of the whiz, developer tooling, right? Sneak, DevSecOps, privacy and data, big ID, big data security right around that. Security scorecard created this whole concept of, since everyone is SaaS-based and everyone connects to one another, you're only as secure as your least secure vendor. So how do I create scoring to make sure that you can monitor 10,000 vendors at once? And so I think about it in intuitive TAM is like, what is the next big technology that's going to take hold? Is that a new attack vector? Can existing incumbents latch on, or can you create a new category around that? And so AI security, by the way, we did that in partnered with Ian, started discussions in late 21, but we did that in January 2022. AI was not on the radar, to be clear. Yes, until we had the chat GPT moment in October, November of 2022, that was not on the radar. So that's kind of what we have to do. And there's another category around that. So that's one, is just kind of new attack vectors, thinking about new things and novel new things. And by the way, I do think that with AI, the hackers have the advantage now. It's always easier to play offense than it is defense, because defense, you're reacting, right? So they're always, they're offensive right now. The threats from, fake videos, from fake emails, all those things. I mean, it's amazing. I mean, Steve, soon there's gonna be a podcast of you saying stuff that is not Steve, but it's actually someone else masked as you, right?
I heard a story I was at an annual meeting, and I hate to even share the idea, but they faked a voice confirmation of a wire.
Yeah, I have a company right now that is in stealth that actually, I don't know if you read about it, but there's been a couple instances, particularly like in Hong Kong, where let's say 4 people got on a Zoom and 3 of them did real-time masking of themselves, of their video and the voice, and a wire went out. But so the point is that there's always a new vector. Guess what? That is top of mind and top of sight for a lot of CISOs. They're fearing that. So net new, based on new technologies, and the other would be reinventing existing categories and doing it 10 times better. So I have a company called Dope Security, Dope.security, which is bringing out a new way to do endpoint security, which puts all the intelligence back on the endpoint device versus round tripping to the cloud. So it's 3 to 4 times faster. It's more secure because your data is not getting shipped to some random cloud somewhere else that you don't know. It's all on your device, processed and encrypted. And it's much cheaper because you don't have the whole cloud infra costs. And then on top of that, what he's done is layered on the superhuman-like interface, which is absolutely gorgeous and beautiful to treat security professionals like first-class citizens. So the software feels like you're using a consumer software. And so you add those things together. Now he's added this new CASB neural net kind of product. So reinvention of things, but doing it way, way better is another area that is always kind of ripe for opportunity.
Interesting. So I see what you're saying about cybersecurity being the gift that just keeps on giving, but a lot of these cybersecurity companies kind of fall into a trap. I think you probably know what the trap is, but it's called point solutions.
Yeah.
Become a great point solution for that one itty bitty thing. How do you think about that? Because by definition in Inception investing, you're investing in points. right? Just by, they can't be a platform right out of the box.
Yeah, I'll give you a few
How does
examples.
that,
Well, I mean, you always have to, I like to tell founders,
so
you have to,
share what the problem actually, why a point solution is problematic and how that,
well, yeah, look, at the end of the day, when you have a new attack vector, it's always going to be a point solution, right? It's not going to be part, there's this whole kind of one throat to choke idea, like Palo Alto Networks says, buy everything from me. CrowdStrike, buy everything from me. Well, guess what? When you talk to some of the largest banks, they do not want to have everything from Palo Alto Networks. So imagine this, if you want to be more secure, a hybrid system is more secure than a system that covers everything, right? If you know what I mean. So I think in cybersecurity, in a weird way, there is consolidation of certain things, right? Because it just saves money and all the other stuff, but you're never going to have one vendor selling into one large organization because the cybersecurity risk from being hacked from one vendor, and having everything taken is much higher than when you have 10 different vendors that you're using. That doesn't mean you want 100 vendors either. So when I look at it, it's like when you have to start narrow. You have to solve a fundamental problem that someone has, to your point, right? Which is kind of a very focused thing. But at the same time, in order to get an investor excited, you have to say, okay, if things go right 3 years from now, what's next? What are the adjacencies? How big? And then, by the way, give me the 5-year vision. So I like to say that the best founders, and it might be not just one, it could be the co-founders too, they have an ability to zoom in on the day-to-day life of an end user and tell me exactly how they're going to make that end user's life 10 to 100 times better than what they're already doing manually or with existing software they have. So they have to have user empathy. At the same time, they have to understand where the budget dollars are and to tell the story of, yes, I'm going to zoom in and change your life and make it better. But let me zoom out and tell you how big this can be. And I said, you need both. But if I have someone that tells me, hey, Steve, let me wave my hands and tell you AI security is a big market, that's not going to get me excited, right? You have to dive into what product are you starting with and why? And then where do you go from there? And why does the user care? Then you make some phone calls, right? You call some CISOs, you call some of your buddies, you figure that out, right? You talk to some engineers, but you have to have the ability to have user empathy and zoom in, but also zoom out and tell a big story. And so, and I'll give you another example. It's not in cyber, but yesterday we had a portfolio company that we funded over 7 years ago at Inception called Clay.com.
mm-hmm.
They announced 62 million of total funding, I think a 46 million Series B at a 500 million valuation. Here's the thing is, we funded it 7 years ago. That is in June. I checked it, June of 2017. Just 2 founders and an idea. Did you know that they didn't officially put their product on Product Hunt until June of 2022? And then it's June of 24 now, and we just closed, at a $500 million round. And they're now a case study on OpenAI's website, openai.com/clay. And what they've done is they initially started out with a dev tool to create these programmable live functions you could share. Then that turned into a more programmable Airtable. And guess what? Airtable is pretty good at what they do. And even if you can actually sell a more programmable one, it's tough sledding, right? It's a horizontal sheet. You have spreadsheets, you have Airtable. But what they found was that people kept asking them, like, hey, can you keep adding more data sources for sales prospecting? So they started adding data sources for sales prospecting. Now they think how they have 80 different data sources primed in there into this spreadsheet-like format. And they started using it to go outbound on their own. And like, holy shit, this is working. And they started adding this whole workflow around, kind of outbound, around research and prospecting, then going outbound. And then people are like, hey, can you actually send the email for me? So yeah, they use AI to write the email. So you and I could say, hey, Steve, let's just use live person example. Let's go find everyone that uses Zendesk software right now on LinkedIn. Let's figure out how long they've been using it. Let's see if they've written some notes about it. Let's actually create an outbound campaign tailored to them and send them an email, right? So that thing has grown like wildfire. And if you look at the OpenAI website, it'll say that each of the last 2 years has grown 10x year-over-year revenue. But to your point, we started out with this horizontal thing. And it's very hard to sell and kind of maneuver and everything else. It's not to say it can't be done, but it's much harder. We went down to this prospecting kind of route to start with, and then we added this full thing. So now we're more of a full suite to help kind of the whole outbound function to go after Zoom Info and Apollo. And we just struck gold. I mean, this thing is, I've never seen anything grow this fast, this quickly in the last 2 years. it took a long time, right? So it's like a fine wine, I like to say. You know, and so I'm gonna write about it in my newsletter tomorrow. But that's an interesting story, right? No one, you know, people had it left for dead, but they kept iterating and iterating and iterating in their product with a very small team. And so I think that goes back to your earlier point is like, you know, how do you kind of get to market? How do you sell? And, you know, how do you actually start? The point product was research, and now it's this full outbound suite.
Talking about your newsletter. So how'd that begin? How'd that start? And like, how do you find the time to write it?
Yeah. So the newsletter is at www.what'shotit.vc. I've been doing it for over 7 years. And before that, you know, Steve, I know you did some blogging in the day. I started blogging like back in late 2003, October of 2003. So I have a blog called beyondvc.com.
Beyond VC, I was going to say.
That has old notes on there. It still exists. I haven't updated it at all. And so how this started was I just enjoy writing.
Mhm.
I just started taking notes to myself. I'm like, oh, you know what? Why don't I just publish the notes to myself based on these little links of things that I've seen or people talk about during the week? So the way that What's Hot works is really, I try to share kind of interesting tidbits from Twitter or LinkedIn or what people send me around, and I put a little comment on it. And it's in 3 sections: scaling startups and about founder mindset and just scaling businesses, et cetera. Could be, and then enterprise tech, just kind of what's happening on the enterprise side, what's happening on the buyer side, what's happening in cybersecurity, whatever, and then market, just kind of what's happening on the IPO side and multiples. And then usually on top of that, I write my own kind of opinionated preamble of certain topics, you know, how to raise capital or what's the sentiment of late stage VCs. Try to give people an insider's knowledge of kind of what's happening in the world based on what I've done during the week or conversations that I've had. And obviously I try to mask, you know, kind of the who's, but it just want to give people some insider baseball.
Do you
And
sit
then,
down on Saturday morning and say, like, I'm gonna have to, you've
yeah,
taken
so
during the week and I'm gonna just like compile it all on Saturday?
yeah, I save all the clips, you know, save all the links and whatever. And if I have time, I might put 10 to 15 minutes a day, just grabbing 1 or 2 clips or articles and write a comment on it. But the preamble is Saturday morning. I sit down like, oh, what's top of mind today? Like what I reflect on the week and I'm like, what happened this past week? And I've done it without fail, sick, vacations or whatever, straight for 7+ years. I'm on issue 500 now.
Yeah.
And the discipline around it, I think is great. And I think it just helps me crystallize my thoughts. I think I become a better communicator, you know, when I write about it and people tell and reach out to me and say, hey, I got questions on this or that or that. And so I do it for me, actually, to make myself smarter.
How do you like, you had COVID a couple of weeks ago. How do you like blast through it? Like, it's the last thing you want to do. I wouldn't have known because I kept on getting your newsletter. So like,
I had a COVID fog there, so it might not have been the most coherent thing that I had ever written, but I just got up and I did it. And this goes back to my earlier point of grit. It just kind of like, there's nothing special. Like I think Tom Brady said, there's nothing special about what he does. He just outworks everyone. Tom Brady said, you saw in the newsletter a few weeks ago, and I really appreciate it. And I'm not a big Tom Brady fan because I'm a Ravens fan and kicked my ass many times. But the point is I can appreciate, he's like, there's nothing special about me. I got up in the morning when no one else wanted to do stuff. And I really just kind of, that is something that I bring that from the sports world or whatever. I wasn't like the most talented person, but I put a lot of work in. Like I'd go in and lift weights and run before practice, you know, and so, and it works. It actually works. A, you enjoy it, and then B, it works. So I just get up there and do it. And my mind gets sharper. I learn things. And then what it's become is that like when I meet some founders, sometimes like, oh, I've been reading your newsletter. I didn't know that was even you for 2 years writing that. And then it gives me a leg up and I'm trying to get it when I'm competing on a deal, Steve, it helps because they feel like they know my voice. Like I'm just being honest. I'm brutally honest. I'm very direct. And hopefully that comes out in the newsletter. I don't BS.
I think so. I think it's very clear you're writing it. It's not someone else writing it.
It's not an AI bot.
Not like
It's not an AI
it's
bot.
not Elliot cribbing the notes that he took from you that he heard you say or something.
No,
This
it's
is
not a
you.
bot. Yeah.
No, that's really remarkable. Um, let's zoom out a little bit more. So like we've been talking about some pretty detailed stuff. Um, a few weeks ago we talked about AI. How it's sort of becoming infused in everything. You
Yeah.
want to share a little bit more? And is there anything that's sort of like non-obvious that you think isn't really out there about AI that not a lot of folks are getting?
I don't think there's anything non-obvious. But look, Steve, you and I have been around the block long enough. Do you remember there were internet funds, there were Java funds, there were
Yeah.
XYZ, there are mobile
I
funds,
always get worried when I see one of those funds.
right?
Well, I don't get worried. I get worried for the people working there.
Yeah, right. I mean, think about it. And so it's a technology.
Right.
And AI is an amazing tech. And by the way, we had this AI moment back in 2016, 2017. The only reason why AI is even doing well right now is because there's a prior AI moment, which was more ML oriented. It was build
Right.
this whole data science team, build the data infrastructure, et cetera, et cetera. And in fact, I think Jimmy Romnetti at the time at IBM had created this thing called Watson's Law. Whatever shall have AI, will have AI embedded, right? Now that was like in 2017, 2018. Now we're 7 years later, and Watson's kind of like, yeah, who knows what it is anymore? But we've got this new technology again,
Way too early.
and all I can tell you is this: I'm not an AI investor, but I'd say that 90% of the existing portfolio companies, the founders, are using AI. Some are using it more than others, right? Even like a Clay, for example, which I had mentioned earlier, is a case study on OpenAI now. When we funded it, it was an AI company? No. Superhuman, case study on OpenAI now. And their AI is all over the place. But was that an AI company? No. They're solving a fundamental problem, reimagining, how to make, email professionals, people using email, better and faster and superhuman-like, right? So that's the kind of way I think about what problem you're solving, how you're doing it. Goes back to first principles. When it comes to AI, yeah, there might be some things like AI security, right? But when we funded Protect AI, it was ML and AI security because we weren't sure where the AI really was, but now it's more AI security. So I don't know. I just, and every founder we meet now, I'd say 90% of them have a story to tell. They're solving a problem. And of course, it's like, I can solve it better, faster, cheaper with this AI thing kind of embedded, right? And so I can't give you a crystal ball answer because there's no one's going to tell you that every incumbent's going to win, and no one's going to tell you every startup's going to win. But you just have to get into the battlefield. You got to write some checks. You got to get involved. And in certain cases, incumbents will win. In certain cases, startups will win. But one thing I can tell you is this: is that I think that if you assume things, like this is the intuitive part, if you assume certain things will be true, then you have to ask yourself what's next. And I'll give you an example. This is kind of second order thinking, is that, okay, if you talk to enterprises across the board, they'll say they get 20 to 30% productivity boost from copilots, from coding copilots. And coding copilots work because it's a pretty structured problem. Same with customer support. I think those are the two best areas kind of that work. So let's assume that. So if you have coding pilots, co-pilots, and there's still hundreds of millions of dollars of more money being spent, and OpenAI, I think, is going to launch their own as well, and everyone's going to have their own. And there's going to be dozens more coming out. Question then is, there's more code written. What happens next? Well, a couple of things. One is the thing that Sneak's doing, and you could probably call them an incumbent. Well, we bought an AI or ML deep learning company three or 4 years ago. We were sitting on the biggest database of vulnerabilities and fixes ever. And you know what we're doing? We're doing auto fixing. So we say two things. One is, before you run the AI on the code, want to remove all the vulnerabilities so that when you're creating new code, it's actually
Clean.
clean code. And then two is with all that code being written, you actually need AI to keep up with AI, right? You've got to actually, and then the third thing we're saying is that, do you want the fox guarding the hen house? We're like, what does that mean? Well, do you want this same model generating the code also doing your security? Well, that doesn't seem to make sense either, right? Because they would have generated secure code in the first place. So that's an example. How about this? More code being written, there's more code to review. How do you use AI to review code faster? More code written, who's going to do the tests? So those are the second order things. I will not put a dime into any Copilot stuff right now on the coding side. I mean, there are going to be some people that are going to make a shit ton of money, and there's going to be even more money vaporized too. But I'm thinking about what's next. And can you build a business around that? Or is one of the existing kind of incumbents going to come in and just eat your lunch because they have such a big footprint? And all I can say is that there's nuances in every category. It comes to the founder. And also, I think what it comes down to, what I've seen even like in a superhuman, is how valuable kind of the user interface is. It's not the AI, right? You can swap in OpenAI or Claude or whatever, but man, have you seen, if you go look at some of the videos that they have, the usage is cranking, the inbound's cranking because it's how native and how special it feels. So the UI aspect and how you embed these things and make it easy for people to understand, I think there's an advantage there. And, it's hard to do until you use it. You just have to use it and feel it. And you're like, holy shit, like this feels magical to me. And the
Mm.
founders that can actually do that and capture that, I think also have an opportunity as well.
Yeah, I was going to ask you about as we're getting to the end of this podcast, if you had any advice for GPs starting out, but frankly, this whole podcast, I think is great advice for GPs starting out, just in terms of the focus and intent and desire. Um, you know,
Yeah, I have one thing to say though, like, Steve, and you would know this, is that it's not like when you and I started our fund, we came from a tier one fund with,
yeah,
largest endowments and institutional LP sitting around, so that when we left, we already had instant money. Like we had to scrap and claw every dollar we had.
right.
And so if you're one of those founders that is not well known in the world, I'll tell you a couple of things. The journey is going to be long. Two is you better be freaking pick something that you're passionate about. Like just like you think of yourself as a founder. For me, it happened to be Inception investing. For Steve, it happened to be kind of coming in on the pro ratas of others and kind of looking at some later stage stuff. But pick a swim lane that you actually know that you love, enjoy, and will always do. And for me, it was also enterprise infrastructure and reimagining enterprise software. Third thing is talk to your wife or your partner, life partner, or whoever, and even your kids, because you're going to get your ass handed to you for the first 3 or 4 years. Like we had a hard time raising capital from 2010 until like 2018 or 2019 until Fund 4 at the end. But yet we kept going. We kept talking to founders. We kept partnering. We kept being passionate. And so it's a long journey. But if you outwork people, if you love what you're doing, if you care deeply, people will know. They'll see it. The founders will see it, right? Those are the people that matter, and the investors will see it. May take some time to prove yourself because it does, Steve, take a long time to even figure out if you're good or not. And I'd say
Yeah.
that I still have a long time to figure out if I'm good or not. I judge myself very harshly, and I got a lot more work to do, right? So if you have that chip in your shoulder and you keep going and you love what you're doing and your partner is behind it, I think you have a very good shot to go out and do something and make a dent.
Yeah, talking about a long way to go. So what's bold? You ask your entrepreneurs what their 5-year vision is. If I flip that back to you, is there a vision for what you're gonna do with Bold Start? Is this
I'd say the
beginning?
I'd say the
Middle?
vision. Yeah, and that's a great question. I think the vision that we have is kind of like now it's me and Elliot kind of were there at the very beginning. Then we added Shomik and Ellen, so there's 4 of us now. Shomik's been with us for 4 years, Ellen probably 2.5. And it takes a long time to kind of, be good adventure. So I think our job is to really have the best 4-person team that we have. We don't want to deviate from our swim lane. There's a swim lane we have. It's called Inception Investing. It's collaborating with founders well before they start their companies, technical founders in the enterprise space. And we want to be there from the very beginning when they incorporate with that lead check, so they don't have to wait six months raising capital. Already help them pre-sell their initial hires. So they're hitting out of the gates very fast with 6 to 8 people already going, and speed matters, right? So we don't want to deviate from that. And so for us, that means we're going to be boutique size. It's going to be pretty much same size funds for the next, as long as we continue being successful and finding great founders. That's what we're going to do. That's what we
The
love doing.
benchmark versus Andreessen or Insight or
Yeah, that's what we love doing. We're not asset managers. We want to help founders build faster, get there faster. And that's why I have the team that I have. Shomik and Ellen are deeply passionate about building a firm and building that and owning that. And they're happy being that. You know what I mean? They don't want to, we're not going public. I'm not going to, look, we do have some opportunity funds that really are really important to us just because we are still on the boards of these companies from the very beginning, from inception until exit. And so we do have unique insight. We do have very good relationships with the founders. We can get super pro rata in lots of cases. And we do want to take advantage of that situation when we can to make sure that we're monetizing the time that we spend to an extent. But those are only for existing portfolio companies. It's not like we're chasing new things that we missed.
awesome. It's just Ed, I learned something every time I talk to you.
Likewise, Steve.
So great to reconnect, and you're a great friend and partner. So thank you so much. Thanks for joining
Likewise.
us today, and let's catch up again soon.
Yeah, man. Look, I really, it feels kind of strange. I already can zoom back and imagine that first meeting when you're at Ad One. building the business, cranking away. And I don't know, man, it just, we're still at it, which means we love what we do. So I think that's very important.
It's been a fun run, and hopefully we'll be doing it for the next, 15 to 20 years, right?
Fingers crossed. Talk soon, man.
Talk to you soon. Thanks. Bye.
Later.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.